Hey everyone, welcome back to Corporate Decoder, the place where we unpack the money secrets of the business world. And tonight, get ready, because Fundamental Global's latest quarterly report is a wild ride that shows they're betting big on a crypto future. Today we're diving into Fundamental Global's Q2 2025 report to see how their business is really doing. You know, they've been through a lot of changes lately, mergers, acquisitions, and now they're making a major pivot that could change everything. Let's jump right into the numbers, starting with their balance sheet as of June 30, 2025. Total assets stand at about $93 million. That's down from 109 million at the end of last year, mostly because they've been selling off some of their operations. Liabilities are also down to about $23.5 million, which is good to see. Now, the income statement for the 3 months ending June 30, 2025 tells a really interesting story. They reported a net income of almost $5.5 million. That's a huge swing from a loss of nearly $6 million in the same period last year. A big part of this turnaround comes from how they're valuing their investments. They reported a net gain on equity holdings of over $6.2 million, especially one called Saltier, compared to a loss of over $4 million last year. This means their investments in other companies bounced back significantly, especially one called Saltier. Their actual business, the products and services they sell, brought in about $9.1 million this quarter, up from $83 million last year. This growth is mostly coming from their managed services arm, which handles things like digital equipment sales and installation services. It seems like their core business is slowly but surely growing. Overall, they managed to turn an operating loss of almost $6 million last year into an operating income of about $5.3 million this year. That's a massive improvement, driven by those investment gains and better cost control. Looking at the first half of the year, total revenue is up to $15.7 million last year. But remember, part of that increase is because this year's numbers cover 6 months, while last year's report only had 4 months of the combined company's results after their merger. Still, the managed services revenue dipped slightly by about 2.4%, which they attribute to customers delaying projects earlier in the year due to economic uncertainties. Expenses for the first half of the year are down to $19.3 million, a decrease of about 14% from $22.4 million last year. They've cut down on general administrative costs thanks to those recent mergers and cost-saving moves. Their net loss from continuing operations for the first 6 months improved significantly, shrinking to about $3.7 million last year. So while they're still in the red for the year so far, the bleeding has definitely slowed down. Now, let's talk about where their money is actually tied up. As of June 30, 2025, they have about $56.6 million invested in various equity holdings. A big chunk of this, nearly $27.20, now called Saltier. A significant portion of these holdings, around $4.6 million worth, are valued using their market prices. This includes stakes in companies like Green First Forest Products and OpFi. The rest are valued using the equity method or at cost. This whole investment strategy is managed by groups like FG Merchant Partners. It's interesting to see that some of the company's leaders, like Mr. Sermonara and Mr. Sweats, are also involved in managing these investment partnerships, which is a common practice but always worth keeping an eye on for any potential conflicts of interest. They also have some convertible notes, like one with Think Markets, which they valued at about $48,500. This note was paid back in full during the third quarter of 2025, so that's one less uncertainty. But the really exciting stuff, the game changers, are happening after June 30. On July 29th, 2025, they announced a massive private placement deal. They plan to raise $200 million by selling pre-funded warrants, and get this, they're accepting payment in cash, Bitcoin or Ethereum. This deal is tied to a big change. They're changing their name to FG Nexus Inc. and drastically increasing their authorized shares. They're going from 4 million common shares to a whopping 1 billion, and preferred shares are also going way up. This is usually done to make way for large stock issuances or acquisitions. And the most significant move, they're transferring a large chunk of their current assets. Think their managed services business, their stake in Saltier, and other investments into a trust. They'll then distribute contingent value rights or CVRs to their current shareholders. These CVRs will give shareholders a claim on any money made from selling those transferred assets in the future. This is a pretty radical move, essentially separating their old business from their new crypto-focused strategy. So the plan is to use the money from this offering to essentially build a cryptocurrency treasury, moving into Ethereum, staking, and tokenization. It's a bold bet on the future of digital assets. Now let's talk about what this all means. The company's pivot to crypto and blockchain is a massive strategic shift. On one hand, it could unlock huge growth potential if they execute well in a rapidly evolving market. Their managed services business is showing some resilience, but is clearly not the growth engine they're looking for, hence the focus on crypto. However, this is also a high-risk move. The crypto market is incredibly volatile, and regulatory landscapes can change overnight. By transferring most of their existing assets to CVRs, they're essentially saying goodbye to their traditional operations to make room for this new digital frontier. The recent financials show a company struggling with its old model but making strides in operational efficiency. The big gains appearing in their financial statements right now are largely tied to investment performance, not necessarily the day-to-day business operations. The real test will be how they perform once they fully transition into this new crypto-centric strategy. The increase in authorized shares and the name change signals a potential transformation, and whether this gamble pays off will depend heavily on market conditions and their execution in the crypto space. Alright, that's our breakdown of Fundamental Global's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think this pivot to crypto is genius or another risky bet that will blow up? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description below to join the conversation with other finance enthusiasts. Thanks for watching. See you next time.